What's up, guys? We'll be starting in a couple of minutes. Before we kick things off, just want to make sure everybody can hear me and see me all right. If you're on Twitter or on YouTube, you could comment. Also, if you have any specific questions, any tickers you want me to highlight during today's show, also feel free to drop the ticker there in the pinned tweet on the Investing.com account. All right, I already see a request for ABB. Interesting. So I'll be checking that during the session. Yeah, happy Monday, folks. We have an interesting day ahead, to say the least. It's a mess out there. Things have stabilized a bit right now, but if you were tracking the futures market when they opened last night at 6 p.m. Eastern time, that was a sight to behold. Let's move straight into the tape. Let's check out what is going on in financial markets this morning. And it's all about oil, obviously, the main story of the day. Let's pull up the chart here. So, right now, crude oil, US WTI prices are at about $102. We spiked to as high as we almost hit 120 in the overnight session, or 116.42 was the high, or actually 119.43. So we did almost touch 120 in the overnight session. It was panic and fear driving sentiment. I took my eyes off the screen for a couple of minutes, and prices went up another 5%. So it was hectic, to say the least. Things, again, like I mentioned, did stabilize a bit after we got news that Saudi Arabia is now pausing oil production as storage fills up. That comes after news over the weekend that the UAE, Kuwait, and Iraq are also are cutting back on production. So that fed into this supply shock fear. And we did see an effort from President Trump overnight trying a bit of damage control, mentioning that this is just a short term pain, short term price to pay for longer term gains. But the main story is that G7 finance ministers are on a phone call as we speak right now. They're on a phone call. There is speculation that they will attempt a coordinated action to release oil supplies from emergency reserves. So obviously that could be a major wild card for today's session. Just the headline when that came out, that the G7 countries are mulling coordinated action, that led to a quick price drop. Like I mentioned, we hit almost 120 in the overnight session. We are back to 101 at the moment, still triple digits, still above $100 per barrel, but well off the session highs. And right now, kind of trading near the opening gap. So, again, any headline that we see in regards to perhaps a drone attack from Iran or a fresh attacks on oil infrastructure in the Middle East, or on the opposite end, if we get some headlines from the G7 call that supply reserves will be released, expect prices to shoot both either to the upside or to the downside. I think this is a good time to ask AI to analyze the chart. If you don't know, Investing.com has this very cool feature where analyzing the chart goes over, I think it's over 120 technical indicators, different time frames. So basically, we'll check that out. That shouldn't take more than a couple of minutes. There might be right now overload on the server. Let's refresh and ask it to analyze the chart again. If you ask me, what we saw in the overnight session could be a very bearish blow off top here, a blow off top candle. Anytime you see a move like this right here, either it's fear or panic, and I think that's what we got here in the overnight session. So let's ask it to go over on the daily chart. We assess that on the daily chart. Give it a couple minutes here. Let the AI do all the hard work, and we'll see what the trade setup, according to Warren AI, what it believes the trade for oil is today. So again, opened sharply higher. There is a gap to fill there. Huge, big gap there, significant gap back to where we closed on Friday at about 92, 93. And again, like I mentioned, this very bearish candle here is a cause for concern. Okay, the analysis is ready. Let's see what the AI has to say here. So again, if you're on the bullish side, this would be a solid entry, or actually on the daily, or we're talking about the daily chart. So again, solid entry right here, different targets on the 119. What you want to do right now is obviously wait for the dust to settle. Definitely wait until we get the headlines from the call, and we'll see. There it is, the blow off top warning. The blow off top warning. See, I'll share a story. I have a cousin. Who, he's a great contrarian indicator. anytime he texts me or calls me up about a specific stock or sector, I know that the move has already been made, and right now he's late to the party consistently. So he texted me this morning. What should I do about oil price, about oil futures? I'm thinking about buying. I think prices were at around 110 at the time. This was during the overnight session. And I advised, of course, just wait for the dust to settle. Definitely don't trade on these emotions where fear and panic are driving the market. He didn't listen to my advice. He sent me a screenshot of his position in the oil market, in the oil futures at around 110. And obviously, the contrarian cousin indicator strikes again. So he's down on his position right now. If you're watching, I won't name names, but if you're watching, I still love you, bro. But yeah, oil prices right now, $100, filling that gap perhaps to the downside, blow off top. Definitely keep your eye on this space as the session progresses. Let's move over to the rest of the commodity space. Hold on one second here. Let's share the screen. Gold prices are down about 1%. Yes, gold prices down about 1%. Bit of profit taking, if you will. Prices are still well supported above the $5,000 range. As long as market sentiment remains under pressure and the conflict in the Middle East rages on, showing no signs of slowing down, as the U.S.-Israel-Iran war now enters its second week. So obviously, gold prices should remain supported during the session. If you haven't already signed up, check out Investing.com's new daily email called The Brief. Very cool, very informative. Get all the major overnight news delivered to your inbox so that you can go over what is moving the market at a glance. 2 minutes and you're already up to date. Very cool. There's also different scenarios. What should you do? If we get a resolution within weeks, then the U.S. and the EU can absorb the shock. However, if the conflict drags on over 3 months, that's when the real trouble starts. Again, what trades you should consider. So something in this email, the brief for everyone. So sign up for that. Check it out on Investing.com if you haven't already. Let's move over to equities, futures markets. We're about 20 minutes before the opening bell, and the S&P 500 futures are down by about 1%. Overnight, again, like I mentioned, we were much lower. I think we were down something by like 2%. So the futures are recovering most of those losses, or half of those losses, if you will. Right here is the gap to fill. There is the opening gap here. We'll check that out if it does get filled to the upside at about 67.25. Let's analyze the chart, see what the trade is for the S&P index. Big moment for the S&P. We were down last week and this morning, pointing to more losses. Got that really lousy jobs data last week, which hurt sentiment on Friday. We'll see if the market, if futures if stocks end up green today, that could be very telling. As the market character right now is very bearish. Any headline triggers a sell-off. But if the market can absorb oil prices at above 100, these geopolitical tensions take it in stride, then obviously that could say something about perhaps a relief rally. Futures now down 0.9%. So we were down at 65.70 at the lows of the overnight session, recovering over 100 points already. So what does Warren AI have to say here? So obviously, if you're bearish or bullish, there's something here: trade setups, entry levels, targets, including stop losses. So the risk management is all done there for you. Super trend levels, Fibonacci pullbacks. What you want to keep an eye on is, don't let the recency bias fool you. A relief rally isn't always a reversal. So again, we've been down from the all-time high, still not far from it. But again, what you want to see here right now, if you're a bull, is kind of a consolidation here near the lows and a move back higher. What could trigger this move higher? Well, there is some big economic data this week. Let's pull up the Investing.com economic calendar, where Wednesday sees the monthly CPI report. Now, obviously, this is before the vast damage from the oil spike, the Iran war. Before that kicked off, so the February CPI data will still be relatively contained as to where oil prices are today. That will be seen in the March data. But again, what you want to see if you're a bull here is that consumer prices are not moving back higher to 3%. At this point, I think there was like a warning from Goldman Sachs yesterday that a 10% increase in oil prices translates to about half a percentage increase in CPI prices. So we've seen oil prices rise almost 40% over the past week. Potentially, that could add 1.5 to 2 points to the year-over-year CPI number. So this 2.5 number could potentially become 4% in a few months' time. And that puts the Federal Reserve in a major pickle, major quagmire. Does it cut rates with inflation fears now rearing its head, or does it do nothing and wait for perhaps prices to go back down on their own? Because unless Fed Chair Powell can print oil at this point, there's not really much he could do. Recession fears now are also starting to appear in the market. Like I mentioned, the awful jobs report on Friday would show that the U.S. economy lost over 90,000 jobs last month. So, there's a lot, different factors, a perfect storm, if you will, of recession fears, inflation fears. That's translating into stagflation worries, where you get awful growth with high inflation, a repeat of the 1970s. So again, this week's CPI report will be important. We also get the PCE price index, which is the Fed's preferred inflation metric. We get that on Friday, where inflation expectations for Friday, let me see, on the PCE index, about 3.1%. So inflation is still pushing above the Fed's target. And with recession fears now starting to appear, the Fed's hands are kind of shackled. Not really much they could do, like I said, unless Powell can print oil. There's the Fed right now, their hands are tied. Let's pull up the Fed monitor tool and see what the expectations are for June. We were much higher for June a couple weeks ago. Right now, it's a 65-35 call for a rate cut, or for rates to stay the same. Only 35% for a rate cut. And as you get closer out to the end of the year, September is already when Kevin Warsh will be Fed chair. Markets are starting to price in some easing in September. But again, the situation is so fluid, so volatile, so dynamic. that things can change on a whim. Let's go over and check out the earnings calendar for the week, because while earnings season is all but over, we still get results from two major companies this week, two major companies that are crucial to the AI trade. And I'm talking about Oracle, which comes out on Tuesday. Oracle's results will be very interesting, or the guidance will be of greater importance. What management has to say regarding the deal with OpenAI, regarding the AI build out, the data centers, that will be big for the stock and for the AI trade as a whole. Another big name is Adobe. Adobe has been hammered, over the past year, if not more, where AI fears basically trashed the stock. And then Claude came out and OpenAI, and we had the whole software sell off from last month. However, we do see prices recovering for Adobe. Nice little recovery here from the lows below 250 just a couple weeks ago. And will this report be the sentiment changer for Adobe? We saw Michael Burry come out with a bullish thesis on the name on X, or on his Substack, a couple weeks ago. So Adobe is a big name to watch. It is actually highlighted as my stock of the week. So again, Adobe, a lot on the line, undervalued by almost 50%. Let's pull up the Investing Pro metrics on Adobe, because really a lot is aligning in its favor. 50% upside. Management still buying back shares, still growing revenue and profit at almost 10% year over year. Analysts are bullish with 23 upward revisions compared to just one downward revision. And I'm not sure I could share this, but Adobe was added to the AI Pro Picks list this month as well. So the AI likes it. Fundamentals are kind of moving back in its favor. Wall Street analysts still love it, but it's still hated by the public and the retail investor. So again, we'll see who's right on Adobe this week. A lot on the line for those stocks. Besides Adobe and Oracle, a couple of retailers are also on the agenda. Dollar General, Ulta Beauty, and Kohl's also come out. So we'll get a reading on the U.S. consumer. And Lennar, the biggest U.S. home builder, that is actually highlighted as my stock to sell this week. So go check that article out on Investing.com. Lennar analysts, 7 downward revisions. We've seen almost, I think for the most part of the past couple years, nearly every earnings day was met with a sell-off. I'm not sharing the screen. Hold on, there we go. Lennar, yeah, almost every earnings day was met with a sell-off for the past couple years. 7 downward revisions. So the analysts obviously are flagging caution and concern. Lennar is a big name to watch as well in the week ahead. We are about 10 minutes before the opening bell. Let me check if we have any requests on Twitter, any ticker requests. Let's check out the pre-market movers. Pre-market movers this morning. What do we have going? So obviously all the major tech names, the mega cap stocks, they're down in negative territory this morning as the NASDAQ trades lower. Not really anything major or market moving, except that energy stocks obviously are moving higher. Devon Energy, EOG Resources, Diamondback. So those names are moving higher. On the downside, seeing some gold miners, Carnival cruise line. That's interesting. The cruise liners, the airliners, they're obviously getting killed with oil prices at $100. Let's check out American Airlines, which American Airlines, I believe, could be down in a bear market. I think it's down like 20% from its high just a couple of months ago. So really, really awful price action from American Airlines. We were at 16 just a few months ago, and this is what we call the stairs up, elevator down technical analysis pattern. So American Airlines getting smacked, as are the rest of the airliners. Let's check out Exxon. Exxon, where prices, obviously, crude prices should support this name up about 1%. It's telling that Exxon can't really rally with crude prices jumping as much as they did. This perhaps is a signal that obviously the move in Exxon might have been made already from 120 to 150 in a short amount of time. Supply disruptions probably priced in to the stock name at this point, and the fact that it's only up less than 1% with all these fears and the oil market turmoil, is telling me that there might be better options in the energy sector. Another big name moving in the pre-market, Hims and Hers Health. Now, this name, I think we have highlighted it a couple of times. It's up 46% in the pre-market. Obviously, that doesn't really help the bulls that bought up at 50. But there is a bit of a recovery in this name. 46% in the pre-market to the upside on news that it is nearing a pact with Novu in order to sell their weight loss drugs on its platform. So we're getting some analyst upgrades this morning from a number of major Wall Street banks. So Hims and Hers, this is a interesting name to watch. 46%, a lot of short interest on Hims. So I think that is a wrap for today. Let's check out the oil price just one last time. 9.6% to the upside. 9.6%. Again, I don't think there have been any headlines crossing the wires yet. We're about 5 minutes before the market open. So be on the lookout. Check out the Investing.com news page and the Investing.com Twitter account for all the breaking news. Today should be a busy one, both the session and a busy week, obviously. Like I mentioned, CPI, Oracle earnings, Iran war, oil supply shock, a lot on the agenda. So wishing everybody a happy Monday. May the trading gods be with you. Good luck, everybody. Have a good one.